Hi, friends, and welcome back. So this one's for people who are interested in fundamentals and even sentimental traders as well. If you're interested in knowing what drives the FX market. So point number one, and this is just a skeleton I've put up. So I put up a summary of the things you should be considering when you're doing your market research. So in your spare time, on days off, holidays, and things like that, you should have a booklet, an exercise book like one of these where you just write about some of the topics I'm talking about here, so you can flesh out your notes using FX Street. Nicholas Taleb does a lot of writing on this topic of fundamentals, and even George Soros does a lot of writing on fundamentals. So this is a summary point of the things you should be considering. So fundamental economic factors like inflation, more printing and dumping of money in the markets, which we sort of saw during the COVID time. Whenever like government needed more stimulus packages and things like that, they would just dump and pump more money into the markets. And so, whilst this does give a bit of a boost in price in the short term, what it tends to do is to devalue money, and the US dollar has been falling ever since. And some currencies even hit all time lows during this COVID time. So, in the short term, it does increase price, but for the long term, it does deflate the value of money, and the price of the currency does drop. So you should also know the point of gold. What happens when something like that is going on with gold? So we know that during economic hardships, gold goes up. So gold is a good investment. Silver is a good investment when there's economic turmoil. So if you've been doing this kind of research and knowing what's going on, you would have known, okay, this time once COVID had hit and the US dollar was dropping, it's time to get into gold and silver, because gold, silver, and the yen pairs, because they are safe havens, and they are also negatively correlated with the US dollar. So what happens is that when the US dollar falls, the yen, the yen, gold, and silver rise. So once COVID hit and the US dollar was going down, gold, silver, the yen were the safe havens where people put their money, and those go up. So you should understand that, and you should also understand things like oil, the price of oil, what effect that has on the US dollar and the FX market as a whole. I haven't really looked into oil, I'll be honest. I don't know much about it, but I've noticed that like when Siam talks a bit about oil, he tends to know what's going on with the currencies, because he trades both oil and currencies. So he has a bit of an advantage in things like that. But what I also love with fundamental factors like in SA, whenever Ramaphosa or whoever's the president decides to shuffle the cabinet, or there's cases against the president or things like that, um, the rand tends to fall. So once you already know that someone's about to shuffle the cabinet, or there's a huge case against the president, it's time to get ready to short the rand. But also be careful that in things like, you can't really predict with like elections is another topic which we're going to look into. But I don't want to get into deep discussions about it. But what you should know is, for example, like, get to know what people are saying. Like, okay, what happens if this person's elected and this person isn't? I personally thought that Biden and Harris's election would make the US dollar rise, but in actual fact, it dropped. So I did take a loss on that, but it tends to happen that, people make predictions based on who's going to get elected. I know when Ramaphosa was elected, everyone was like so confident that once he'd be elected, the rand would go up, and that did happen. It shot up exponentially when he was elected. So you should know things like that. Then we're moving on from fundamental economic factors to geopolitical factors. Things like wars, floods, strikes, and protests, those devalue a currency. So you're looking for short positions when these things happen, and you're also looking for buy positions in companies that make weapons and armory during times of war, right? Obviously, it makes sense. Um, that also drives the forex market, and in essence, these include activities of the central banks. You should also know the activities of the central banks. So you can read up on a lot of articles written on FX Street about central banks' decisions. I'm sure if you just search, and once you know, like on FX Factory, if you know this event is coming up, search for it on FX Street or on the web, and sort of find out what people are saying about where the current central banks are saying, and what's likely to happen if they do a certain act. Political upheavals, wars, pandemics, and many others. So that's what drives the FX market in essence. And then economic calendars. You should always have an economic calendar, like if FX Factory. So the nice thing about that is it doesn't give you a prediction and tell you we think it's going to go up or down. But what it does is it tells you what events are coming up, so you know to just step back, or you also know to do some research, and it's a potential good opportunity for you. So FX Factory is a good one to get your news. Um, it's a great way to keep tabs on critical economic events, what's going to happen with the currency pairs, what's going to happen to silver and gold. And you get to find out also, like, they tend to write also things on, like, big investors and what they're doing. I'm always concerned with things like that. Like, if Buffett told us about silver a while ago, and he was like, listen, silver is going to be the next big thing. And even though people were like gold in 2020, gold was the biggest one. Actually, silver had the biggest move past gold even. So yeah, you get to know what those big guys are also doing as well. Technical aspects of speculators also move the FX market price. So we're all using the same patterns. We're all seeing the same things. So we're all using heads and shoulders, rising wedge, falling wedge, descending triangles, and things like that. So even though if you're not a technical trader but you want to focus on fundamentals, it's important to also just know what everyone is seeing. Um, so that if you're a sentimental trader, you want to make sure your fundamentals and your technicals are all aligned. And if they're not, and if you don't know the technical side, or if you don't know the fundamental side, you're not really necessarily disadvantaged, but I think you might see your performance slightly improve or drastically improve if you know both sides. So I know some people are more interested in technicals, others are more interested in fundamentals, but you should just try to understand fundamentals and to appreciate them. So even if you're not a fan, just force yourself to read and understand it. Um, and you'll tend to find that you like things you're good at. And so once you become better at fundamentals, you actually learn to enjoy it. It's the same thing with technicals. A lot of people don't like it in the beginning because they're not good at it. But once you get good at something, you'll end up liking it. So try fundamentals. Um, Increase your research in it, reading books on it, reading articles on it, listening to news. Be careful of news, but listen to news events and things like that. Um, and it's impossible to attach the FX market movements to one factor. I mean, there's so many things that drive it. There's manipulation that you can't really predict and say it's going to do this because there's going to be manipulation. You really don't know. But the things which are in our control are the things I've summarized here. This is the stuff we can research on, we can improve our knowledge on, and we can improve our performance overall.